I'm here to talk to you about just a single asset class that is one of our funds, and that's gold. Gold's a pretty old asset class, and occasionally or regularly I get the question, why should you invest in gold? It's pretty old-fashioned. It's not Bitcoin. It's not a tech stock. But we're here to discuss why you should or should not invest in gold. This basically says you shouldn't blame me if you make any bad investments based on my advice. So what is gold? It helps to start with what gold is. And gold is a form of money. It's been a form of money for over 5,000 years. It's a store of wealth. Every currency given by whatever king or, shall we say, government that has ever existed has always come up with a form of money. It was cowrie shells in some places. Paper currency was invented by the Chinese about 2,000 years ago. It's been coins, tablets, a number of things, but it's always been given out by a ruling class of some sort, and it's always been used as a medium of exchange, both a store of value and a medium of exchange. Eventually, governments or rulers always print. They always produce more of that money. The reason why gold has been an asset class for as long as it has been is because it's not printable. You can mine it, but you can only mine it at a very, very slow rate. So all of the gold that's ever been taken out of the ground from the time of the ancient Egyptians till now is largely still around. I mean, a little bit of it's buried with some guys underground, but most of it is above ground, stored in someone's vault or around someone's neck. The amount of gold we produce every year is that little gold, the little gold ball on the, less than 1% of the total amount of gold in the world is produced per annum. And despite our desiring to get more of it out of the ground, it's very hard because it gets rarer every day and it gets more and more expensive to get out of the ground. So we have never successfully, we reached peak gold production globally a couple years ago, and it has been going down simply because it's harder to find and harder to get out of the ground. Most commodities in the long run are their price is a function of supply and demand, how much we want of it and consume, and how much we can get of it and get out of the ground at any given point in time or grow. Gold's different. Gold is a store of wealth. We don't consume it. We consume a little bit of it these days in electronics, but the vast majority, 96% of it, I believe, is still used as a store of value. And generally speaking, while many people in the world keep it as a store of value constantly, a certain amount of it tucked in the back of their portfolio or in their bank vault or around their daughters' necks, the majority of it, there's a small amount of it that gets bought and sold as when people are wondering whether their other asset classes are going to go down in price, either because of a recession or a declining currency or a number of other things. It's an inflation hedge. So despite what we think about gold being not very popular today, especially compared to global stock markets, gold demand is actually stronger than it's ever been in history. The majority of gold is stored in vaults, as we said before, and those vaults belong to the nations of the world. And the biggest one, interestingly, is the US nation. And the reason they keep it in vaults is because it backs up their currency. So as much as they print of their currency, a small percentage of the value of their currency is backed up by gold, something that is inflation hedge adjusted and can't be printed. Now, another point that's quite relevant is whether or not we in this room believe in gold as an inflation hedge and a store of wealth doesn't really matter. It's completely irrelevant to where the gold price is going because 60% of the world lives in Asia. And through the rise and fall of many civilizations in Asia, gold has always been a currency, and it is the universally acknowledged currency of Asia. Every Indian, and Chinese person, whether they're a farmer with a tiny bit of gold around their neck that they're holding in case of bad times and bad harvests, or into their daughter's dowry, or the richest billionaire of an Indian keeps gold in their vaults as a store of wealth. The same thing happens in China. It's very, very similar. Their banks keep it as a backup to their currency, and their people keep it, and their people are actively encouraged to buy it because they believe it's a form of savings that is safe. So Then there's the part of gold that isn't saved forever and is an inflation hedge and a store of wealth, but there's the amount that's traded in the world, and that amount is traded, and the price of that it trades at, per se, is correlated to three things over the last 100 years. Real rates of return, so inflation-adjusted rates of return on bonds, generally speaking. The stock market, so the value of other asset classes, and the stock market's a major one, and the value of a currency. The longest term, steadiest correlation to the gold price is real rates of return. And you say, well, hold on, interest rates have been going up massively, and gold, while it hasn't gone up a lot, has gone up a little, despite the fact that interest rates are rising. The reason for that is quite simple, because while interest rates are rising, inflation's rising faster. So real rates of return are still about 0.5% negative globally, if not a little bit more. So real rates of return have to be tracked very carefully when you want to figure out where the gold price is going. And there are many, many people in the world, myself included, that believe that the amount of money that was printed or created during the global financial crisis to prop up our economies will eventually work its way into the system, and means that governments have to keep rates relatively low for the long term, as in slightly below the rate of inflation, because they need to slowly devalue their debts that are printed in those currencies. Precious metals are also inversely correlated to the stock market. Now you're like, oh my God, we've had a great 2 years. Bull cycle extraordinaire. Why hasn't gold tanked? Why has it actually gone up about 20% over the last two and a bit years? The reason for that is because while gold has been, the stock markets have been going up, real rates of return are still negative, and the dollar has been going down. Dollar's gone down about 10% in the last year. Gold's gone up about 10%. There's a massive, I'm sorry I couldn't find the right graph, but there's an absolute, there's a very close correlation, inverse correlation between the dollar and the gold price in dollars. So it's those three factors that significantly affect it, and the fact that we can't find any more gold. Like, the rate of finding more gold and producing more gold has gone down consistently. So as we said earlier, gold demand is based heavily on Asia, but the last thing that's quite interesting is that while gold is a store of wealth by most of the central banks in the world and the people in the world heavily in Asia, it is a form of money, but it's never been a form, or for the last few years, it has not been a form of money that we trade in. It's not a currency that becomes a medium of exchange. That changed quite recently, and the extent to which it's going to affect the gold price is yet to be determined. But in order to disassociate's the wrong word. In order to become less reliant on the US dollar as the petrodollar of the world, the Chinese government in Hong Kong has recently released an option on a gold contract denominated in RMB. This is the first time that there's been a gold contract denominated in something other than dollars ever. And they're being used against oil. So for the first time since around the 1950s, you can buy oil not in US dollars, but in gold. And that has significantly changed, or was likely to significantly change how people value gold as money and potentially as a currency. But it's yet to be determined how much that's going to affect the gold price. So why should you buy gold stocks rather than gold itself if it's a store of wealth and a currency that might go up when Jim Mellon's predicted stock market crash happens sometime in the next year or so? Because gold stocks outperform gold itself. And you say, well, why is that? Why does it regularly 3 times outperform the gold price increase? It's actually quite simple. If a gold guy is producing gold and the gold price goes up 1%, his profits go up 5% on average. And that increase in profits that he makes is translated into his share price, which means on the whole, if you buy gold stocks, you will, in the long run, make more money. So where is gold in this bull cycle? Gold bull cycles usually are related to the credit cycle, inverse to other asset classes, and usually we're about 2 years into what should be a 3 to 5 year bull cycle. And that is the average length of a gold bull market cycle. And we're still at the relatively early stages of it. The major change, I personally believe, is not going to happen until the stock market's correct. And I truly don't know if they're going to correct in the next month or in the next year or so. But it's one to watch, and you're seeing more money go into the gold market because a lot of people are predicting this change in correction in the stock markets and are looking for a hedge against it. So where are gold stocks in this bull market? They're really early. It's actually still a reasonably decent place to invest. So if you do want to get into gold stocks, I would suggest you do so. Now you need to be a little bit careful because there's the old adage by Mark Twain, how do you define a mine? It's a hole in the ground with a liar on top. It's very difficult to buy gold stocks. It's very difficult to know which companies are going to perform or not perform or do what they said they're going to do. But on the whole, a diversified portfolio of gold stocks should yield relatively well, assuming the gold price goes up in this bull market cycle. I run the TC South River Gold and Precious Metals Fund. You can find me on most of the major platforms, and you can actually see my performance. I've actually done pretty well in the last couple of years. So that's about it. I'm downstairs at stand 25. If you have any questions, because I don't think there's a lot of time for questions here, I'm happy to answer them on anything, whether or not it's regarding my fund, later on today. Thank you very, very much.